Hey everyone, welcome back to Inkmattic. Hope you're all doing well, had a great Christmas break and a happy new year. This is the first video of 2021. Sorry I didn't post last week, I couldn't fit the video into my schedule over the Christmas period. So today we're going to be talking about the overall portfolio performance. We're going to talk about some of the stocks that I have and what my plans for them, how they've been performing, any dividends that I've received, and I guess my outlook for 2021. If you haven't seen my latest stock analysis video, it's my first one. It is linked up in the card above or in the description below. Well worth checking out if you haven't already checked that out. Don't forget to subscribe and like this video. It really does help this channel get out to more people and help this channel grow. If you want to use the same trading app that I use, which is Trading212, when you use the link in the description, you'll get a free share worth up to £100 when you sign up and open a Invest or an ISA, which are both free. Highly recommend checking them out. And yeah, that would really help support the channel. All right, so the portfolio is now at £10,840.77p. I've invested £9,833.19p, and that is including profits from stocks that I've sold, dividends that I've received, etc. Returns at the moment is £1,007.58p. That's 10.25%. I was actually worried that I wasn't going to hit that £1,000 mark because it was looking pretty tough, to be honest, because I did drop below the 1,000 mark towards the end of the day on New Year's Eve. So I was a little bit worried that I was going to be under that target. So anyway, just scraped past it. Really happy with that. You know, it is a goal that I wanted to set, £1,000 in profit. I'm hoping to grow this over the next year and hopefully double what I have, or maybe, I don't know, go to around 25,000 in total. That's my goal for 2021. So in terms of Airbus is actually been doing quite a good one when I look at it overall. So I've got 5.5 shares in Airbus. That kind of equates to around £442.32p. So it's doing pretty well. Returns at the moment is £147.34p. That's 49.95%. Gains, I'm up 48.61%, and the FX impact, I'm up 1.34%. So that is working in my favor. My average price is at €60.86. So I did get at this at a very good price. And if we do look at like pre-pandemic, it was around €136. And yeah, it's been around 120, 136 euros around that time. So it is recovering. However, I do think we may see a dip with the airline manufacturers because, you know, airlines are struggling at the moment to get flights. And recently a lot of countries have, you know, put up their barriers to entry to get to visit countries and restrictions, cancelled flights because of this new strain of COVID-19. Or coronavirus, whatever it's called. So yeah, there's two new strains, I believe, one in South Africa and one that was found in the UK as well. So, you know, there's definitely going to be increases in barriers to travel. And this is definitely going to impact the airlines, and in turn will affect the airline manufacturers because, you know, through cancelled orders, etc. So yeah, I do think we will see a drop in share price for Airbus and even Boeing as well. That's just what I think. I think, you know, potentially if it does drop, it may be another buying opportunity, but I'm hoping things start to return back to normal maybe second half of 2021, as you know, the vaccines get, you know, distributed and people will actually take them. I personally think it's a little bit fishy with the Pfizer one because, you know, watching the CEO's interview, but that's just what I think. But, you know, I guess if the vaccines do work, then hopefully we should see life returning back to normal soon. Moving on to Alibaba, this is actually an interesting one as well. So they're in a little bit of a trouble with the Chinese government, and this could actually go two ways. So one, you know, they may just get a slap on the wrist and put up some extra regulations, etc., and no biggie. But then This is the Chinese Communist Party we're talking about, and they could just break them up. I've got 2 shares in this at the moment. I'm up £10.86p, and those 2 shares are worth in total of £339.92p. My average price is at £211.52p. So I'm thinking personally that I'm just going to hold on to these and just ride the wave out and see where it goes. Because I do think Alibaba is a fantastic Chinese company. You know, they're at the top of their game in the Chinese market. And, you know, they've got like the biggest customer base of any single country. So I do think, and then they've got their international ones for Alibaba, those retail or wholesaler things, I think they're called. So I think, you know, they've got their domestic market, they've completely dominated, but then I think they kind of dominate the wholesale market as well, especially when it comes to exporting goods from China. So this could actually be something to consider. So I'm just going to hold on to these at the moment. Moving on to Alphabet, and I think Alphabet is a fantastic company. It is going to continue to grow. We are, as companies are moving more towards e-commerce, you're only going to see Google get stronger in this space. I guess the way to think about this is, as more companies are moving to e-commerce and, you know, retail stores are closed due to COVID restrictions, etc., you are going to see that big push to e-commerce, you know, people signing up to Shopify, Squarespace, setting up their own WooCommerce sites, etc. So you are going to see that big push, and you are going to see those stocks rise as well. But in turn, you're also going to see Google seeing a huge win for this, because to rank organically, to rank on search results is actually really difficult. I've been trying to rank high on my websites and on my blog, and it is proven to be quite a challenge. So in terms of e-commerce, you are going to end up signing up to Google Ads and, you know, start advertising and competing, and that's going to get very competitive in my view, and that in turn means more revenue for Google. And, you know, I don't know about you guys, but I'm pretty sure everyone, the default search is type anything in Google and see what comes up. That's my approach, and it usually works. And you're probably going to click on the top ad or the first 3, and which are usually all ads. It's basically a big win for Google, and I think, you know, they're going to do tremendously well. Moving on to Apple. So with Apple, I think, you know, it's going to be a really tricky one for Apple, because they've released that M1 chip, and I'm not going to lie, I hate Macs, but that is definitely tempting me to go out and buy an M1 MacBook Air or Pro. Like I'm tempted to get the Air, to be honest, because I want to do some like video editing, but in turn that's going to tempt me to try out Final Cut Pro. So, you know, it's trying to get me into that ecosystem. I personally don't like them. I've had a bad experience with Apple in the past, but this M1 chip, the performance it's giving from what these YouTubers are saying, is really tempting me to ditch my Windows Surface Book for a MacBook Air with an M1 chip. I think Apple is going to be a really strong contender in 2021, and they are planning to launch or develop a electric car. It is very capital intensive to get into the car making game. So, you know, something that Apple does have a lot of cash to do. So this would be quite an interesting rumor if this actually does develop and surface. In terms of Apple, I'm not really sure what their approach is. Is it going to be battery driven, battery technology, or even, you know, self-driving? You know, Apple definitely does have the capabilities to develop a self-driving feature and then, you know, issue them or lease or sell it or license it out to other car manufacturers for, you know, maybe a competitor to Tesla's autopilot, which would be kind of interesting. So yeah, I'd love to know what you guys think about this. Do you think Apple is going to be a buy at $132 per share, or do you think it's a little overhyped right now? Because I've got 1.11 share, so 1.11 shares, that totals around £107.85. I'm up 8.83%, that's £8.75 already. However, the FX impact is taking a little bit of my profits overall. So, you know, I do think it's going to be quite a strong player overall. Cloudflare has actually seen quite a bit of a tumble this week. It did hit highs of around 87, 88. Did it hit any higher than that? Yeah, so it did hit around highs of $87 per share, and it has been taking a little bit of a tumble this week. And if we look on the week, it is actually down 10.53%, which isn't ideal. I've got 15 shares at the moment. I'm up £619.52p. That's 290% in the green. My average price is $17.84, so I did get in early. I'm still bullish on this, and I do think it's going to hit around $100 at some point. You know, Cloudflare is probably becoming one of the leaders in DNS and cybersecurity, that I think, in my opinion. Obviously, do your own research on this. This is just my personal opinion and not financial advice. Moving on to energy transfer. So energy transfer, I actually increased my position on this yesterday on New Year's Eve. Yeah, New Year's Eve. So I purchased an additional 10 shares in this. I've got 440 shares at the moment. I am down £178.19p. That's 8.23%. Both the gains and losses section is in the red and the FX impact is in the red, so they're both not really working in my favor. My average price is at $6.39, so it's not doing too well. Total value at the moment is £1,986.72p. In the week it is down 3.88%, so it's not ideal, but it did hit a high of around $7.02 in the last month. This is actually when I did see it, and then I was like, you know what, it's going to hit again. I'm going to sell a little bit, but it didn't really work out. So, but yeah, overall, I'm pretty happy with this. I think my goal for 2021 is probably get to maybe 500 shares in total of energy transfer, and you know, if that does happen, that would be a really good dividend payer, to be honest. I think this will pay me a really good yield. If they do maintain a dividend at 15 cents per share per quarter, then that should give me around $300 per year. So, you know, I'm pretty happy with that. If they do raise it to what it was before they cut it, then, you know, that would be happy days. But I'm pretty happy with energy transfer for the short to medium term for now, and I do believe it's going to get, when things do return back to normal, I do believe it's probably going to hit around $10. Main Street Capital. So Main Street Capital is something that I've been recently buying quite a bit of. I've got now a total of 45 shares now. Total value is £1,060. I am down £7.47p. That's 0.7% in the red. Gains and losses, I'm up 2.54%. However, the FX impact is taking away all my gains and giving me some losses. So that's why I'm down 0.7%. Average price at the moment is $31.44. So from this, I am expecting around $7.65 per month, hoping my calculations are correct on this, and you know, that is what I will be getting. So let's move on to some of the dividends that I've received. I received a dividend from the S&P 500 high dividend yield, low volatility, and that I received at £1.32. They paid 22.06p per share, and I had 6, so that gave me a total of £1.32p. And I also received a dividend from Realty Income, and that paid me a dividend, if I can find it, that paid me a dividend of 20 cents per share. I had 14 at the time of X. I've got 19 now, so hopefully the next one I should see a nice little increase in that. So a total payment of £2.05 after withholding tax. So pretty happy with that. Hopefully I'll be able to build this up to, I think for 2021, I do want to get to about 30 in Realty Income. But at the same time, I've got a total of 29 individual stocks and ETFs in this portfolio, and I do want to get this down to around 25. So some will be going, and I'll be putting them into existing stocks. I'm not looking to buy into any more in this portfolio. I just want to have fewer stocks and just larger amounts in them. I'd love to know what your strategy is for your portfolio. Are you trying to build your own ETF in your portfolio using pies, or are you going for fewer stocks but it's just more money in them. I'd love to know what you guys think. So I guess my outlook for 2021, I'm not really sure. I don't think things are going to return to normal anytime soon, but I think in general, I think by the second half, we may see things return back to normal, you know, as these vaccines develop or further refined, then hopefully we should see things, you know, slowly return back to normal. But I think realistically it's probably going to be Q3 in my opinion. But I think at the same time, some of these stocks may be a good buy. What I do know is that, you know, we're probably going to be in lockdown for at least probably the whole of Q1. That's just my opinion, and I'm just, you know, speculating right here. But I do think, you know, it's going to be tough to get around this. But yeah, that's it for this video. Hope you enjoyed it. Happy New Year to you all. I hope you guys had a fantastic Christmas, and don't forget to like, comment and subscribe, and see you in the next one.